Hashtag Boondox Trader Market Insights for Wednesday, July 29th, 2026. Good morning, traders. This is the Boondox Trader Market Insights Daily Briefing, your edge before the opening bell. I am your host from the Boondox Trader Desk. Today we are covering the Federal Reserve decision and how to trade around it, the continued chip sell-off with Asia sending warning signals, another wave of smart money call buying in AMD and NVIDIA, the Ethereum pullback after Arthur Hayes added to his position, the oil unwind as the Iran risk premium fades, stress still building in private credit, a look at overall market breadth, and we wrap with the Boondox Trade of the Day bonus. Let's get into it. Hashtag Federal Reserve Decision Day. The Federal Reserve wraps up its two-day meeting today and will announce the rate decision at 2 p.m. Eastern, followed by Chair Powell's press conference at 2:30. Markets are pricing in a high probability of a hold, so the real driver will be the language in the statement and any shift in the dot plot. If Powell sounds patient and data-dependent, the market will likely take it in stride. If he pushes back on expectations for a September cut, expect volatility in the Nasdaq and in rate-sensitive sectors. Lower oil prices and weaker consumer confidence are already shifting the narrative. The Conference Board's latest survey showed fewer consumers feeling good about current business conditions. As a result, traders trimmed bets for a Fed hike. CME Group data now shows a 31.5% probability of a rate increase, down from more than 36% a day earlier. That is still elevated, but the momentum is moving away from tightening. The 10-year Treasury yield fell to 4.60% from 4.65% on Monday. This is the kind of day where defined risk trades shine. A credit spread lets you express a directional view with a known maximum loss. A long call or put gives you convexity if the market makes a big move. The mistake most traders make around Fed days is oversizing into the event, then getting stopped out by the initial whipsaw. My rule: cut position size in half, widen mental stops, and let the first hour after Powell finish speaking before committing new capital. Hashtag chip sell-off sends warning signals. Semiconductors are under pressure again. On Tuesday, the S&P 500 rose 15 points to 7,428, a gain of 0.2%. But that modest headline masked a massive divergence under the surface. The Dow Jones Industrial Average jumped 537 points to 52,747, up 1%. The Nasdaq Composite fell 55 points to 24,876, down 0.2%. The market's biggest winners and losers were living in completely different worlds. The damage was concentrated in chip makers. Micron Technology dropped 8.9% and was the heaviest single weight on the S&P 500. AMD fell 8.1%. Applied Materials dropped 7.8%. The selling started in Asia, where sharp drops in SK Hynix and Samsung Electronics dragged South Korea's Kospi index down 10.8%. Trading was temporarily halted at times in Seoul. There are two stories here. The bearish red is that the AI capex build-out is hitting a wall. Enterprise AI ROI remains weak, and the competitive landscape is shifting. Chinese lower-cost AI models could mean less demand for memory and computing power than expected. The bullish red is that institutional money keeps flowing into semiconductor funds despite the pullback. Morningstar analyst Jing Jieyu called the sell-off a knee-jerk reaction and said the dominant position of global chipmaking leaders is unlikely to be threatened meaningfully. The truth is probably somewhere in the middle. Chip demand is real, but valuations got ahead of themselves. For credit spread traders, this means avoid selling premium directionally in SMH, NVIDIA, AMD, or MU until earnings give us a clearer trend. If you must trade them, keep it small and keep it defined. Hashtag the rotation story is accelerating. What happened Tuesday is not just a chip sell-off. It is also a rotation. Strong earnings from old economy names helped lift the Dow while tech dragged the Nasdaq. Coca-Cola climbed 5% after revenue rose 7%. Sherwin-Williams rallied 8.3%. Illinois Tool Works rose 3.6%. All three beat analyst expectations. This matters because it shows the market can hold up even when AI superstar stocks swing. Strategists have been calling this a potentially healthy rotation for months. If money continues moving out of high multiple tech and into dividend-paying industrials and consumer staples, the broad market can keep grinding higher even if SMH takes another leg down. For a credit spread trader, that means be more cautious with bull-put spreads in tech and more open to neutral or bearish structures if the rotation continues. Hashtag smart money is still buying AMD and NVIDIA calls. Despite the sell-off, options flow shows institutions are not running for the exits. Moomoo community posts this week highlighted bullish call buying in both AMD and NVIDIA. That matches what we saw Tuesday. When a sector sells off on price, but institutions are buying upside options, it often means the pullback is being treated as an entry point rather than a trend reversal. The test comes after the close today and through Thursday, when Microsoft, Meta, Amazon, and Apple report. Their cloud growth and AI capital expenditure guidance will either validate the dip buyers or extend the correction. As a trader, do not front-run that. Wait for the reaction and trade the follow-through. Hashtag Ethereum pulls back after Arthur Hayes adds. Crypto is soft ahead of the federal Bitcoin opened Tuesday around $63,700, down about 2.5% from Monday. Ethereum opened near $1,890, down over 3%. The Ethereum story got extra attention because Arthur Hayes bought another $6.39 million of ETH hours before the price dropped to around $1,872. That extends his recent buying streak to roughly $13.87 million. The lesson here is not to copy Hayes's exact timing. Even sophisticated buyers can be early. The lesson is that ETH is attracting serious capital on weakness. For traders, crypto is still event-driven around the federal. If Powell sounds dovish, risk assets including BTC and ETH could catch a relief bid. If he sounds hawkish, the next support levels get tested. Hashtag oil unwinds the Iran risk premium. Brent crude has pulled back sharply as the U.S.-Iran pause continues. On Tuesday, the October Brent contract fell 4.4% to settle at $82.08 per barrel. It has been falling since late last week, when September Brent briefly touched $102. The risk premium that built up during the conflict is deflating fast. That is good news for inflation expectations and for consumer stocks. It also removes some pressure on the Fed to react to supply-side shocks. The drop in oil also helped push Treasury yields lower, which feeds back into the rate outlook. The longer-term story remains the Strategic Petroleum Reserve, which is sitting near its lowest level in decades. Short-term, oil is calm. Medium-term, any flare-up in the Middle East or a SPR refill program could put a floor under crude. Watch the weekly inventory data and any headlines out of Hormuz or the Red Sea. Hashtag private credit stress continues to build. The private credit market, now estimated at $1.5 to $2 trillion, is showing stress that cannot be ignored. Fitch Ratings reported the private credit default rate hit 5.8% in January, a record high and nearly double the 2025 monthly average. Consumer products defaults surged from 6.1% to 12.8% over the past year. Lending is concentrated in technology and software, the same sectors facing AI disruption. Borrowers often lack public credit ratings, so problems can stay hidden until they suddenly break. Fed Governor Michael Barr has warned about psychological contagion, where stress in private credit gets extrapolated to public bond and loan markets. So far, high-yield spreads have stayed stable, but this is a background risk worth watching. Hashtag market breadth snapshot. A quick look at the tape. Semiconductors are leading lower. Old economy and software names are holding up relatively better. The Dow has outperformed the Nasdaq in recent sessions, which is defensive rotation. Bond yields are moving on Fed expectations. The VIX is elevated but not spiking, which tells you the market is nervous about events rather than panicking about systemic risk. For credit spread traders, this environment rewards patience. Wait for the Fed reaction before adding directional risk. The first move after the announcement is often a trap. The real trend usually sets in during Powell's press conference or the following morning. Hashtag Boondox trade of the day bonus. For today, we are watching SPY for a 1-point credit spread opportunity after the market opens. With the Fed decision at 2 p.m., the morning is likely to be choppy and low conviction. Our scanner will run after 9:30 Eastern when real options quotes are available. Remember, every trade is paper only until proven profitable. Each trade is its own $100 account, with a $10 hard stop and a 50% profit target. On Fed Day, be extra selective. Hashtag Boondox Trader Closing Outlook. Here is my read as the Boondox Trader. We have a Fed decision today, big tech earnings tonight and tomorrow, and a semiconductor sector that is being repriced. That is a lot of event risk in a short window. The safest plan is to trade less, size down, and wait for clarity. If the Fed holds and Powell sounds balanced, the market will likely resume its digestion of earnings. If he sounds hawkish, tech and crypto could lead lower. If he sounds unexpectedly dovish, the relief rally could be sharp, but may not last if earnings disappoint. The themes to keep watching are AI CAPEX execution, private credit stress, and whether crypto can hold the $60,000 area on Bitcoin. By Friday morning, the picture will be much clearer than it is right now. That wraps up today's Boondox Trader Market Insights. Trade safe, manage risk, and we'll see you tomorrow.